Great. So basically, you've already heard from Johnny and Daniel about everything that's going on with respect to their projects. We've obviously got them on the panel, but they are joined by Wilfred van der Bos, who's the investment officer for structured finance in energy for FMO. So FMO was, as already was mentioned, involved with the CP, the solar project in India. And we've got Thomas Pang, who's the CEO for Keppel Infrastructure Fund Management in Singapore as well. So basically, just to continue the discussion, obviously, Wilfred, from your point of view, obviously we're talking about financing and everything that's needed in order to create a good project. We've had the views from Johnny and Daniel. Can you add something from FMO's point of view with respect to what are the good projects and what do you require in order to finance these types of projects? And obviously, if you want to give some background on FMO, that'll be great as well.
Okay, thank you. And maybe first some background to set the scene. FMO is the Dutch development bank. We call ourselves the Entrepreneurial Development Bank. And we are majority owned by the Dutch government, 49% owned by the private sector financial institutions. And energy is one of the key focus areas, besides financial institutions and agriculture. And within energy, we have a very strong preference for sustainable energy, as we call it, renewables, energy efficiency. And it's from a product range, we can do the whole range from equity to mezzanine loans, senior loans. We're like the smaller brother of the Asian Development Bank private sector, like an IFC. We work a lot together with other European DFIs like GEG, Proparco, and that's it in short. From a bankability point of view, I mean, just to proceed on the topic, would like to shed some more light on the project we co-financed with the Asian Development Bank. And you heard already a lot today about bankability, among others in the JUI presentation. And it's all about risk and how the risks are mitigated. Of course, the lower the risk, the easier it is to finance. And I think there is also where development banks can play an additional role because we're able to take higher risks, but still some aspects should be good. I mean, and one of the key aspects where we look at, of course, first of all, is the whole government structure. Is the regulatory framework well? And in this particular project, this 100 megawatt concentrated solar power project, where you are dealing with a new technology, where it's solar power, it's relatively expensive, so you also go and look to the offtake structure. I mean, this is the first line of attention. And in India, I think this is part of the national solar mission. They prepared a structure that was acceptable, where the government really is showing very strong support for these phase one projects, as they call them. They set up a separate fund to cover event of defaults from distribution companies. Actually, they set up a nodal agent, part of NTPC, so actually part of the government, which is the real off-taker of the project. And subsequently, they're on-selling the power to 3 distribution companies, which are actually weak off-takers. And the interesting aspect there was that they mixed the solar power with coal power before they were selling it to the distribution companies. So lowering the threshold there. So instead of having 12 rupees, you mix it with coal, maybe you end up with something around 7 rupees. So you're getting close to the same price as wind. I mean, from a financing perspective, that looks good. There should be good liquidity support in PPAs, and many other aspects. Maybe also another key aspect in that project is the technology. It's a new technology. Actually, it's the first and largest project in India and worldwide with this particular technology within the CSP aspect. And of course, that can only become bankable when the lenders are not taking too much of that risk. So you can only do that when you have really strong sponsors, a really strong technology provider, in this case Arriva, backing up this technology, believing in it, and when things go wrong, that they are financially on the hook. That's the same for construction risk. Of course, here in this case, we had Reliance Infrastructure, reputable and financially strong entity. So all these bullet points, all these parts were falling in the right place. But of course, we're not only not looking to the big sponsors with the big balance sheets and the big track record, because then we would remove a big part of the also of the business potential. But it's important that the parties have money behind them. And they can also come from private equity funds, which have really a developing mandate. Maybe some other issues to mention. I'm not sure I'm taking too much time, but for example, land issues is also a key problem. Often, especially in India. In this project, it's leased from the government, it's in the desert, it's not a big issue. Water, of course, with solar power is crucial, especially with the CSP technology. With PV, it's less. It's also important, but this project is using 5.5 million liters per day, so you need to have a good resource there in this desert. It's of course, solar supply. Make sure you have done your proper studies and you have at least 1 year on-site data available. I think that just some key points that I wanted to raise.
Have you ever had a project that looked actually really good, but that just fell through in terms of the financing because something just didn't work?
Yeah.
Can you give an example?
Unfortunately, we have to also to reject many projects because one of these boxes one of these risks are not well mitigated. And we receive many opportunities also from developers which have no money behind them. So they really have to do some more work and try to find strategic partnerships with our private equity funds or other parties who have track record and money behind them. I think that's a good first step. In very limited situations, FMO is also available to invest development capital. We manage some special funds from the government, which we can use for that purpose. But that's correct.
Fair enough. Great, thank you. Well, let's go on to Thomas. Thomas, your perspective is completely different from an investment point of view, as you like to invest in well, you like to take a little bit less risk. Would you, from your point of view, if you obviously give some background on your fund, but also specify what exactly you're looking for if you are to invest in a project after some of the risks have been taken out?
Okay, thank you very much. Well, I think before I go on to talk about K-Green Trust, I probably just want to add on a little bit to the gentleman's earlier question about the larger sponsors. Why in most of the projects ADB or World Bank or IFC are supporting only those with the larger sponsors? I think for any country to start a renewable energy policy, it is likely that they will fall back on some of the more reputable conglomerates or the larger enterprises to make sure that the first couple of projects does not fail. I think that's something that's totally understandable. I think you don't want to roll out a renewable energy policy and let hundreds of people to go try it out and then see that you have a large failure rate. So you have to understand the viewpoint of a government. And while we all say that solar PV is relatively simple and risk-free, and we all know that it is not. I think you have land policies, you have land settlement issues, you have flood, you have potential of issue with connecting to the grid and so forth. So you need people that are large enough, that have the track record, that have the understanding of local issues and local policies and local connections in order to get the project to work. But you would see that as and when projects start to roll out and start to get successful, then that opportunities start to open up to more players. And which is what we are seeing as well right now in Thailand and in many other countries. So I mean, with that, some of you may have heard my colleague's presentation earlier on at 2 o'clock. My colleague YC Lu, who was here at 2 o'clock. K Green Trust is a listed business trust that have the objective of holding on to infrastructure assets for the long term. So initially we have 3 projects in Singapore. 2 of them are waste-to-energy incineration plant, taking municipal waste and dispose of them and generate close to 60 megawatt of electricity at the same time. And we also have a water plant that take sanitary wastewater and convert them to ultra-pure industrial water. And for us, we are investor at the operational stage, so as to allow the original developer to take profit and recycle their capital and move on to develop more projects. And we look to dividend, we look to cash flow, so we look to deliver stable yields. And in our case, in existing 3 assets, the off-takers are Singapore government agencies, so the high credit rating, low risk. And our operations and maintenance contractor is our parent company, Keppel Corporation, through one of its subsidiary. So we look to them to also guarantee the performance of the plants. So basically, we accept relatively low return in structuring an asset that is essentially mitigated most of the risk away. And going forward, our mandate is to look for green infrastructure in this part of the world and also in Europe. And solar PV and onshore wind falls into the category of assets that we are interested in besides waste and water assets. And essentially, we while we are technology agnostic, but we don't want to take technology risk. So solar PV is one that is fairly well proven with many years of history, and for solar PV, we are also willing to take on a little bit more risk and come in at the shovel-ready stage, and not just wait until project is completed. Essentially, this is supply and demand. I mean, when there are more money chasing after fewer projects, you have to be a bit more competitive and take on slightly more risk than I would like to. But for solar PV, we can come in at a slightly earlier stage, and we can take on the role of the project financing as well, instead of just the equity portion.
And if you talk about risk, are there particular countries that you're a bit more comfortable with respect? Obviously, a lot of these projects are financed through feed-in tariffs and all kinds of subsidies that are dependent on government guarantees and fed through distribution companies, for example. Are there other particular companies that you feel more comfortable with or not?
I think like all our colleagues here on stage, I think Thailand obviously is a country that we are quite keen to look into, and we are discussing with quite a few developers currently. Australia, Japan, France, UK, Germany are also the countries that we look at. And of course in Singapore, but unfortunately there aren't enough space for us to install solar PV. But we are glad to say that we have a small little plant on top of our water recycling plant that produce about 1 megawatt right now to kind of reduce our dependency on conventional energy. And reducing costs. I mean, all of you know that Singapore energy cost is one of the highest. So anything we can do to reduce energy costs is important. Yeah. When we invest and operate and get a bit more knowledge and then we can grow beyond this region into the other Southeast Asian countries.
And if you're talking, you obviously want return, can you share what kind of returns you're looking for?
I think investing, because our assets are currently all in Singapore and we are listed, so you know what kind of returns that we have and what we are delivering to our investors. What we are able to deliver to our investors, it's also important to note that we are not looking at IRR. I think we are looking for dividend yield and cash yield, essentially. We look to assets that is able to distribute cash flow on a regular basis back to the investors. In our case, we distribute twice a year. And any countries you look at, then you must be able to have your currency movement quite easily and not have too much capital flow restriction. In Singapore, currently we are delivering between 7 and 7.5 dividend yield. So for assets, when we have everything, all the risk mitigated for cash coming back to Singapore, that is what I have to meet. I have to be slightly better than that, of course.
Fair enough. That's useful. We touched upon technology earlier, and obviously technology, it's not only a CSP versus PV story or versus wind, but it's also a story about what kind of equipment do you use. And obviously, right now we've got a bit of an issue with several companies exiting the industry. How do you guys deal with that issue? It tends to be very country specific. In Germany, they're happy with Chinese panels. In the Philippines, they wouldn't even touch them. How do you assess the bankability of a module or of a wind turbine in this space for the projects that you invest in? Anyone?
Maybe I can take this. We had a specific example, and so one of our projects uses, two of them uses Suntec from China, which is currently bankrupt. And we had, one issue was where just before we dispersed the funds, the Suntec was announced that it was bankrupt. So that was quite a big issue to solve. And how did we overcome it in this specific case was that first, all of the panels had been delivered already on site, so no risk from that point of view. And other companies were also on the hook for the warranties. And as well, of course, Suntec is still operating and so on. Yeah, but it was not easy to convince our investment committee to make the disbursements. Going forward, it's of course very important to be able to show that the manufacturer is likely to be around for time of the warranty, but it's challenging at the moment.
But you covered it by insurance? You mean someone else took over the warranty for the panels?
It was more separate, different company in the EPC consortium, which had joint and several liabilities. So it was basically different companies who would take over all liabilities of the entire contract.
Fair enough. And but how does that? How can you convince the credit committee later on that one of these companies is not going to go bankrupt?
Yeah, just one other thing, of course, was also important to see that PV technology doesn't. The track record of, let's say, Suntec panels are very good. So historically, their warranty claims are less than 1%. So we talked to the lender's technical advisor also to say what would be a worst case degradation scenario, and then show that the financial model will still work even with a worst case scenario, so that we don't even expect to claim, to need the warranties to make it bankable. So those are, of course, important technical mitigants as well, which for CSP would be very different. So, for example, the Arriva power plant, I'm sure it's totally different because maybe you can.
Yeah, fair enough.
Perhaps I add a little bit from our perspective. During the early development stage, we did consider a few of the top provider, Qcell being one, Kyocera, Sharp, and Suntec. However, the shareholder were more focused on either the Japanese or European technology. But it was good to have Suntech there to help with the pricing negotiation a bit. And at the end, I think we thought we went with a company that's been around for a long time. Sharp celebrated their 100-year anniversary last September. But at the end, if you know, they had issue with their LCD TV aspect that almost brought them down. So even though on the solar aspect they were fairly wealthy, healthy, but you know, you may even need to consider the company as a whole. And back when at 4 years ago, the insurance company didn't offer the product, which I think now they do offer some type of insurance to cover the long-term warranty. So with the newer project, they may consider either the vendor pick that up or they pick that up. And just as an example of how Sharp handled technology issue, thin film amorphous is newer than crystalline. I think it's been around 10 years. So long-term degradation has a little higher uncertainty, and we discovered that under our site conditions, slightly hotter, more moisture, higher moisture level than Japan. So some of our panel had leak current and developed delamination, and I think that's common. And we actually was able to negotiate with Sharp that if the growth of delamination reached certain threshold, which was actually much lower than the original warranty, they would have to replace it, and Sharp did actually honor that. So that's an example of when you select the right equipment maker, they will back up their technology, because after all, they do also have to protect their reputation as well.
Wilfred, have you got anything? You know, how does FMO look at the technology issue, not necessarily CSP, but all of the others as well? Is there any requirements that your credit committee has with respect to what will be approved and what won't be approved?
Yeah, so from a technology perspective, of course, first of all, the right technology should be used for the right location. But that's more a point that developers will assess in their feasibility. Then, yes, for bankers, they like the word proven. That's first of all, and that's what was the key challenge with CSP. And then, of course, it's very important that we have a positive outcome of the assessment of the technology supplier, financial standing, the forecasts. And I mean, this is not only in the solar industry very relevant, but also at the moment, for example, in the wind industry, we're having these kind of similar discussions. Who are the winners and the losers? But even the losers will not necessarily mean that they will disappear. There will be some kind of shakeout. So there are some economic mitigants, but that's often very difficult to use in an investment committee. So yes, as a sponsor, make sure you also focus on that point in your assessment. It's not only price, it's also the other part, getting your project bankable.
Fair enough. Obviously we want to get some questions from the floor as well.
This is a question for Thomas. You made some interesting comments on the return profile specifically related to yield and dividends. So what I'm keen to get your perspective on is what sort of equity investors do you like to have in the capital pool that you have? And that's part one. And part two, what sort of geographies on the asset deployment would you look at for the redeployment of the proceeds?
For equity partners, I think we don't need to have a partner. We can own the projects 100%, you know, after the post-construction. But for if they are in countries where local content is required, we will be happy to work with equity partners with the same kind of financial objective. So cash yield is important to us. The dividends should be distributed on a regular basis. So if the company is looking to accumulate a portfolio of assets and then go for an IPO, that may be a little bit more difficult for us to work with, because that financial activities will be a bit disruptive to us. But if the plan is made clear out front, then we can probably work towards a plan on, and we will ask for certain rights of first refusal when the partners wants to exit. So we can work with a partner again, if the financial objective align. And I'm not quite sure on your second question on redeployment of fund in terms of geographical market. But I mentioned earlier the countries that we do look at is Singapore, number one, of course, there's our home country. Further afield from Singapore, it would be Australia, Japan, and Thailand. And in Europe, it would be France, UK, Germany, and now Ireland is emerging out of its crisis, and we are increasingly looking at Ireland as well. And in probably once we get comfortable after a few investment, then we'll look further afield to other parts of Southeast Asia.
I've got a question to Daniel from ADB. So you have a significant exposure now to Thailand, and there's a little bit something in India, it's not a little bit. What is the outlook, the investment plan for solar, wind here in Asia Pacific going forward?
I think China will definitely be, so I mean, there's quite some activity going on. There the question is to what extent can it be structured as project finance, but my colleague covering China is looking at solar power plants. And we're waiting for the Philippines for a long time already. So there the question, as you know, is about the tariffs and the implementation of it. And as soon as there is a scheme that is actually implemented, ADB will be very keen to finance solar projects in the Philippines as well. Malaysia has been there as well, but the plans have been very small, so probably not, I mean, they wouldn't really need ADB to get to financial close. And I think that's the main outlook. I don't think they have I mean, I haven't heard of many projects yet in Indonesia. Yeah. So, of course, I mean, we would go wherever there is a market, so in our developing member countries. But so we expect the most, so in addition to Thailand and India, we expect really the China and the Philippines to be the next ones.
Can I ask a question? Has anyone looked at off-grid, solutions for remote islands? And I mean, of course, the size tend to be a bit smaller, but for development agencies, would that be a part of your mandate to look at off-grid solutions in?
So definitely yes, but not really from a private sector operations point of view. So for ADB has a lot of off-grid projects through our public sector operations, where we have technical assistance and pilot projects where we finance small communities, etc. But the problem is really from a private sector operation, what if the transaction costs? It's for us to get to through our credit committees, etc. We need technical reports, etc. Legal agreements that are quite expensive, just the lawyers. So it's kind of difficult for off-grid to be viable with international banks.
Maybe just to add on that, from FMO's perspective, yes, majority is on grid-connected projects, but we manage a couple of funds on behalf of the government. One is the Infrastructure Development Fund, which we have used to also finance some off-grid electricity solutions. And that's, but these tend to be difficult projects, and also the issues raised relatively small. But yes, we have some limited room available for good off-grid solutions.
Let's hope there's going to be a bit more development on that front. Just a question on actually developers and track record, because obviously all of you, we've just recognized that the initial projects were with bigger counterparties, but when are you going to feel comfortable with developers or equity providers with less of a balance sheet? What are the criteria that you require in order to feel comfortable with a smaller entity?
Maybe just some notes, which is, besides looking only to the sponsor, of course, the key aspect is, that's often related, is the project management team. Project management team needs to have a good track record. That's obvious. So yes, we are also looking to some opportunities where you see that experienced people step out, they get funding from private equity funds and set up a business really with the vision to build up a big portfolio. So these are opportunities we are also looking at, and they also succeed. Yeah.
So it doesn't need to be, okay, we've done 5 projects, we've done 50 megawatts of X renewable energy. You can also, you know, kind of trust the people that are behind it.
Yeah, and if you have a big amount of money supporting you, ideally from a fund with experience in the solar industry or renewable industry, that makes sense, and that could work. Of course, like, it's also important that the money is available to cover for cost overruns when they arise. I mean, the sponsors are aiming at high returns, so they should also have the funding available for these kind of risks.
So a private equity fund will get a better chance than a pure developer?
No, that's not what I exactly meant.
Okay.
It's you wanna?
Well, I think that's probably where K Green Trust has a bit of role to play. I mean, if there's a private equity fund backed team of people that are developing a projects, when the money is needed for construction, K Green Trust could come in to participate and fill the gap, equity gap, and as what Wilfred has said, the track record of the team is probably equally as important. So the combination of money and expertise and track record would make it, would make it work, I think. And
yeah, the water supply is crucial. Without water, there is no generation possible. Because the interesting aspect here is that, of course, the water is heated, and the steam will generate or will turn the turbine. In this case, there is a very good connection to the Indira Gandhi canal. So there's a very strong supply of water, and actually it's a win-win situation because along, what is it, like 100 kilometers water pipeline has been constructed to a substation, water substation, which will be used by the community, including agriculture. And this project is only taking a very small piece of the available water. So that's indeed a key point on that point.
So was the pipeline built for the project?
So there's a pipeline built to a substation on behalf of the government, and then there's a pipeline from the substation to the project, and that one has been built by the project. Yeah.
Cool, great. We'll wrap it up. I think it was very useful to get your perspectives on which projects have worked and what kind of things that you're looking at in terms of the requirements for next projects. Hopefully, we can get the further financing to increase over time. Please join me in thanking the panel.